Hi, this is Chuck Oliver. Welcome to Taxes Saved. Super excited to share with you the Taxes Saved case of the week, where we're going to showcase a six-time tax deduction, right? So 100,000 can create up to a $600,000 first year deduction. You do not have to be a business owner. You could be a high income retiree, you could be a high income W-2, or you could also be self-employed. And this is where people are missing the mark because they're assuming two things. One, do I qualify for this, or is this really only for the uber wealthy? Look, folks, if you've had a big divestiture, maybe it's a sale of a property, a business, maybe you're not normally a high income earner, maybe you are a high income earner, maybe you got an inherited IRA. It doesn't matter what the circumstance is. If you are facing higher taxes than what you're accustomed to, and you want to learn how to save tax, you're in the right place. And this week's case of the week, I think, is really going to get home for people. And the emphasis, Davis, we'll make sure we make here is this deduction is traditionally a 5x deduction, but
Mm.
for the remaining weeks of this, what we'll call the fiscal year, right, that ends at the end of September, it's still available for a six times deduction. And this client took full advantage of that. And the really cool thing of how we share the short-term tax savings with the long-term tax savings is there's an extension that we'll talk to you about at the end of this review, which we'll make very quick, that this client saved a ton of money in taxes, but then the long-term savings in taxes is in the hundreds of thousands to millions. But let's focus what we have today, Davis. Let's go into that.
Yeah, this is a real strong ROI that we achieved for this client in first year tax savings. And then, like you said, Dad, next week we'll cover the long-term tax savings. And those are even all the more merrier. I think clients even get more excited about it because they like playing the long game instead of the short game. We help clients with checkers, but really we're playing serious chess when it comes to these strategies. So, and the impacts they have. So go ahead and share my screen as we always do and pull this up. Right? And so we got the return on the left. This client happens to be a single filer out of the state of Maryland, and they are retired, right? And they're in their 60s, and they really are starting to draw down what they've worked hard and saved hard in these accounts. And they didn't want to get screwed over by the tax deferred accounts, and so we helped them get a good plan to getting a lot of their money to Roth with some great strategy. So all this income added up, you can see here the big amount of income was almost $1 million of Roth conversion they did. They're looking at $1,063,903 of total income in the state of Maryland, right? And so that's going to give them a burden of taxes of $405,000 and that almost 38.1% effective tax rate, right? So to get him out of $400,000 tax bill, what did we do here? Or what did this client pursue of a great strategy? This is a software investment strategy that falls under Section 179 or 168K of tax code, right? And they implemented where they outlaid, they qualified and got in early enough to get the six times tax deduction. And so they put out 61 grand to get $365,000 of deductions. Now, why this amount? Every client's situation is very different. But this was the max amount of limitations and deductions he could take this year for his circumstances, right? So we utilized that amount of capital to get him the most amount of bang per buck he could with this amount of deduction that he had, because he will have more to Roth convert, going in from this year to next year and a few more years in his overall plan, right? It is a process. It's not just a product and outcome. It's really truly planning. And so this plan, we got $365,000 of deduction, you can see here on line 8 of the tax return, that brought his income, right, from $1,063,000 of income with a $405,000 tax burden, now down to $698,850 of income with not only still sizable, but
Right.
a substantial drop off from 405 to 249,000, right? And a 23.5% effective tax rate. So right here, the first year, 61,000 was outlaid in this strategy, but to save 156,000 in first year tax savings and now getting $1 million almost growing and compounding tax free. It's a 255, almost 256% return on tax. Now, as you know, Dad, we haven't even talked about the other features that the strategy provides income and long-lasting benefits with this opportunity. But right here, the maths to where this client obviously saw the ROI that was beneficial for his circumstances and implemented with great success and achievement, right? So that's this week's analysis, a big rate reduction of 14.6. I strongly encourage people, if you like this type of short-term ROI to why the numbers make sense, you'll be really thrilled to see next week's tax to save case study of the week, where we go over the long-term benefits this client achieved with the conversion of almost $1 million that was accomplished.
Yeah, and folks, we made it super simple. Just go to taxessaved.com. That's taxes, Taxes, excuse me, saved, saved.com. And what you'll find is there's an on-demand, right, webinar, right? And the two case studies that we teach in that on-demand webinar take about as simple as 20 minutes. And when you see the red box with the white arrow, click it. You put in brief information, and within minutes, you'll have tax saving strategies at your fingertips. And here's the thing I want to leave you with. You
Yeah.
do not have to be uber wealthy. You do not have to have some massive amount of, income. If you're facing a tax burden, and I think of people that have reached out because they sold a rental property or they had a big capital gain on their real estate, or I think of people that have reached out and that are just, they had a bigger bonus or they exercised stock options, or look, they wanted to do a sizable Roth conversion like this client, especially if you'll take the time to learn what we call the tax risk road that you're traveling. This is the eye opener that your tax professionals and your financial professionals are not talking to you about. This is why we have a number of CPAs on our team. But I want to be clear. Some of the case studies, when you think of $1 million Roth conversion, some of you have reached out and said, well, I don't know that these strategies apply to me because I'm not a business owner or I don't have $1 million to Roth convert. Folks, if you're facing a sizable tax situation, do yourself a favor and go to taxessave.com, watch the on-demand webinar. But if you know you have a tax savings motivation right now, just go to that site, scroll to the bottom, and request a saving tax optimization plan analysis. This is a complimentary review to show you exactly both the short-term tax that you could save while there's still time, and then the long-term tax, not only that will save you, but will also save your family, especially if you've been a heavy saver in these traditional ticking tax time bombs of traditional IRAs in 401ks. But you've got to hurry. These types of incentives and these types of having the accessibility and what's remaining, not only do we have a time limitation, but we also have an accessibility limitation because these are getting used up very, very quickly. So if you're sincere about wanting to save tax and you want to learn how quickly you can see what that looks like and how much you can save, some of you are learning how to take the tax savings from your income and retiring sooner. Some of you are looking at the tax savings by not having to have these required distributions or getting rid of these IRAs while we have Trump for about another 3 years. This is the time to act so your income can be tax free. Your Medicare won't tax you. Your Social Security can't tax you. But you've got to act, folks. The time is now, and there's not a lot of time remaining in this year. So if you're serious about tax savings in 25, while these strategies are still alive, right? The 6X, etc., go to taxessave.com, request your saving tax optimization plan. You'll be glad you did.